So wonderful to have you, Sonal and Ravneet, with us here on Startup Fridays. As I said earlier to you, Sonal, absolutely thrilled that you are being so consistent with the Startup Friday thing, and a lot of women out there are benefiting from this. And the expert advice that you've been giving, along with India Network's team as well, and the funding support that you are providing, hats off to you. I'm so impressed. And our special guest today, Ravneet Manji, I think there's a long list of things she's achieved and she is yet to
Absolutely.
achieve. And I'm sure Sonal will give a befitting introduction to Ravneet ji. But honestly, I'm so delighted to have you here with us today. And we are all looking forward to listening to you. The others I see on the screen, we've got Smita, who's our president-elect. We've got Kavalji, who will be soon taking over as our vice president for the South. We've got Tina. We've got a whole lot of people from our governing council here. And I think those who are not here are really looking forward to seeing the recordings later. So I would request the NAREDCO Secretariat to make sure that this goes to almost everybody on our list. As you know, NAREDCO is a association of 11,000 developers, and MAHI is the women's wing of that association. So we are very proud and, like I said, wonderful to have you here. Let's start now with our Startup Friday.
Absolutely. So thank you so much, Ananda ji, for a brief introduction here. And thanks a lot, Ravneet, for taking our time for a discussion. I understand, you've had a lot of back-to-back schedules, but it's really a pleasure for us to have you here. So I think, with Ravneet, she obviously does not need much of introduction right now. She is a part of Stride Ventures, where, she's been taking care of the investments and the M&A deals with them. But there is something more interesting about Ravneet right now. She is also been a judge with a collaboration with Stride Ventures has done with Good Glam Group, where they've been trying supporting women entrepreneurs on their ventures as a mentor, also on the fundraising side also. So Rabneet has that also as a separate initiative which she's been working on, and that's another commendable thing that she is doing. So to begin with, I would just like to start a discussion on startups, which is something which is very, very close to me right now. I've been in and out dealing with a lot of startup founders, their journeys, the challenges that these guys go through. So it's like, when I'm speaking to any investor, so, personally, I get more involved to understand what are the various challenges which these guys have been facing and how we can help trying finding a solution to it. So my first question here, Ravneet, would be, courtesy Shark Tank that you talk about. Everyone today wants to be an entrepreneur, starting from a college pass out that you talk about. If you talk about any 18, 19-year-old student today who's just started with college, if you ask him, kya karna chahte ho? Majority of the times, the answer comes, I want to be a startup founder. Or, if you're talking about anybody at the mid-age where he's been into the career for some time, wants to do something different, the only thing that comes out to be, I want to be a startup founder. So coming from your side, I would like to more understand, please share your thoughts on how to be startup ready. मतलब, everybody wants to be a founder, लेकिन आप अपने आप को तैयार कैसे करते हो? What are the things to be taken care, right from freezing the product to taking care of legal compliances? What are your thoughts? How do you think, founder needs to prepare themselves?
Thanks, Sonal. I think that's a very comprehensive question. And I think before I start off, I just wanted to give a quick introduction. I know you've done that, but at Stride Ventures, I'm the Chief Strategy and Policy Officer. I look at, enabling the Stride brand across the entire Stride platform, which is not just for Stride Ventures, but for Stride One as well. So Stride Ventures is a fund that provides venture debt to a lot of companies. We have a portfolio of 100 plus companies where we provide, funding on balance sheet. And Stride One is a regulated NBFC that provides funding off balance sheet. The idea is to cover startups from, a 360-degree perspective. And I think that's really, where I want to really start off towards creating a link to what your question really is. Where do you really start off from? I think one needs to have a full 360-degree overview when you start off. It cannot be just the seeding of an idea or a concept. You need to delve beyond that into, ensuring that that idea is, of course, market worthy, market ready. There is establishing a good product market fit, because there's, ideas are plenty, ideas are cheap. It's the execution that matters as well. So really fine-tuning that idea, identifying and ensuring a product market fit is there. Once you've done that, having the right team in place. Oftentimes, I mean, and I've asked this question of a lot of people, a lot of funds that are investing in a lot of founders. I was like, do you have a mantra? Do you have a ready checklist that has to tick off all boxes before you really dole out the check? And I can guarantee you, nobody has a set template. It varies. I would say it is subjective. Of course, there are basics that need to be ticked off, but there's a lot more that comes into play. It's the energy of the founder. It is his vision. It is his ability to carry out that execution. It is his ability to create an entire team, or her ability rather, in fact, so to create an entire team. And are you really a team player? Can you grow your team with you? And a lot of times you do end up seeing, mature, startups that have reached Series B, Series C rounds, where co-founders then ultimately end up splitting. So what sort of caveats or preemptive measures have you put into place to imagine such a scenario? I mean, I was at a discussion recently where, one of the panelists mentioned this really interesting point. She's like, if there's more than one founder, I asked them, what are the provisions you guys have put in place to ensure that if there were to be a situation such as this, how are you going to handle that split? Who will be looking at what aspect of the portfolio? And that's really trying to understand the mindset of, the founders, of the entrepreneurs, that who it comes first. Is it the organization, or is it the respective selves, those respective founders? So it is having a very laser focused vision on, once you have created an entity, it is a living concern, right? How is it being nurtured, and putting that first over and above your interests? Of course, there's a lot of elements come into play, ensuring there's good governance into place. I think it's a subject that I guess everyone's a lot more exposed to of late, given what we've been reading in the news. But I can't stress enough on the importance of ESG. Unfortunately, I see a lot more focus and emphasis more on the G aspect of ESG, but I think we're getting there slowly. There is enough conversation that's happening, when I'm expecting enough adequate action to, match onto those conversations that are happening on the environmental and social aspects as well. Stride as an entity, for example, we do definitely accord some amount of, I would say, a subjective quotient that I would want to assign to organizations that fulfill a certain criteria from these aspects. In fact, more than 22% of our portfolio is impact oriented as well. So, yeah, so it's also about identifying what is the problem that, this company is trying to solve. How are they innovative in, solving that problem? What is the competitive edge that they're bringing onto the table that cannot later be usurped by another entity? Because at the end of the day, if you have identified a certain solution that exists, there will be enough and more entities coming up to capture that opportunity, especially when barriers to entries are low, right? So what is it that you can do to ensure that if you have established that first mover advantage in a certain case, how can you sustain that over a period of time? How can you create a much larger share, capture a much larger share of wallet of what the pie is? And what is your vision to grow with that? And, you were mentioning, in fact, when we had last spoken, about identifying the need to be able to pivot at a certain point in time. And now that's, of course, I would say a difficult question to address, because, the flip side could be that if you went back to the drawing board, the product market fit wasn't well defined, that the need to pivot really did exist or come by. Or maybe the market
Absolutely.
has changed and the variables and the dynamics have changed, and therefore you do need to pivot. And that's an entirely different story. But having the cognizance and the maturity to understand, instead of going brute force with what you have identified as your solution and not innovating along the way, could be a huge challenge, and could be a huge pitfall for a lot of startups that aren't able to grow from that perspective, and aren't able to mold themselves according to what industry demands or what the market demands. It's having a good insight into your target consumer, whoever it be, getting into the mindset of that consumer. How open are you to driving those conversations and really trying to understand that? Is it just a field study done as a one-off to tick off that, okay, that fitment is there? Is it retrofitting, or is it really trying to derive insight from those conversations? From that perspective, ensuring that you have good controls in place, because believe me, it's at the foundational stage when you need to get a lot of things right. You won't have time to go back and cover up, year 3, year
Agree.
later.
Absolutely.
Especially from let's say, a financial perspective, foundations aren't strong. You haven't set those procedures into place. And I think the number one important thing, according to me, is the people. Betting on the right people. I mean, giving out venture debt. The number one thing I feel that when we underwrite companies, we underwrite the people
The
at the end
promoter,
of the day.
primarily the
Thank you.
promoter.
Yes. So it is identifying who you are surrounding yourself with and getting the right team and the right people in place. And are you able to really, drive that talent and take that talent along with you? I think it's a huge factor to play in terms of how that company will really grow and shape from just the product it has to becoming, a market leader in the space that it operates in.
True that. No, I think, very well covered, Ravneet. I also, most of the time, end up with situations where founder comes up and he says, we started with this product and, we've been working on it for last 2 years, but we're not able to grow. So that is where, where they need to understand that probably this is the time to pivot or think about something where you don't have a market for that right now, and add on something which, probably would make it a market fit. So I think, that is very, very critical for a promoter to understand when to pivot, as sometimes they become very, very sensitive about the product which they have launched and they get emotionally attached to it. So that time, it's important to trigger them back, because the product is not a market fit. So instead of spending more time, energy on researching on this product further, it's better you make it something which is acceptable to the market, and there's no harm in it. So it's like, if you pick it up at the right time, add on something where you make it market fit and make it a profitable venture. So I think that should be the key for any promoter to think about today.
Also, I think, when you do pivot, I think the flip side of that is a lot of times there are distractions that can come into place. Do you have a solid product already? And
Absolutely.
feel there is another opportunity to capture, but do you have the wherewithal, the resources? What is the focus that you're really having? Because, like I said, ideas are cheap. So, how many SKUs can you really take on? Do you want to spread yourselves thin, or do you want to build, dominance in a certain place and then phase out? Having a long-term plan and defining, your milestones in a time-bound manner for that long-term plan also ensures that you're well covered, not just from if the need to pivot is so required, but also from a growth perspective.
True that. Great. So my second one that we were talking about, Ravneet, generally is on the funding side. So when you start up, the first thing, generally which comes to a promoter's mind is a bootstrap or a fundraising. And at what stage do you think, it's important to take that call? Because, generally I was reading through some of the articles in the past. So in India market, I don't know how does that work much in the overseas market, probably the percentage is more there. But in India market, when you talk about, there is probably 15 to 20% of the startups who are able to raise money today through the investors route, through the regular investments that you're talking about, not the HNIs or the seed investors or the angel investors that we're talking about. But in case, you're looking at VCs today, so there are only 15 to 20% who are able to attract that kind of market. So what is your thought, when you're doing a startup? Is it good to start up as a bootstrap? And at what level do you think a fundraising is required? From a promoter's perspective, from an industry perspective, what is your thought on that?
I think that's a very relevant question, but unfortunately, there's no cookie cutter, one size fits all answer to that.
I
Because
understand. Yeah.
it will totally depend on industry, it'll depend on the business model, it'll depend on the revenue structure of that particular company, it'll depend on the inherent, the inherent capital structure such a company would have. Will it be a capex heavy company? Will there be a use case for, needing more equity funding to start off till you can attain a certain level of scale? But I mean, the answer always is, and I will, of course, give a biased perspective from a venture debt fund perspective, but I think it's one that is always in the interest of a promoter. The reason there is, adequate interest and growth in the venture debt space is because now founders, promoters are getting they're becoming savvy and they're understanding the need to not dilute and have down rounds for raising more when there are innovative financial solutions out there. And I think that's something they need to be cognizant of. At what point you also need to ensure that you're only able to do that at a point where you're getting the right value, for the dilution that you are doing. And are you in agreement with what you're getting, or are you just taking a deal on the table because of, whatever factors may be at play at that point in time? And it's important to understand that depending on the stage you're at, from a concept stage to becoming a revenue earning stage to becoming a CM3 level positive stage, of course, all of those come into play when you're having these negotiations. So I think it's important to be aware of what would be the discounting factors. How long can you hold off to ensure that they're not factored into the level that you would want them to? And basis that, take a prudent decision. But of course, all of this has to tie in looking at how much capital you require to grow to what, your target, that you've set for yourself, what your goal is. Because time is an asset here as well. So bootstrapping may sometimes elongate, your time to profitability, or the opportunity that exists in the market at a certain point in time, which you don't want to miss out on.
True that. And when you're talking about venture, just, while we were discussing, when you're talking about venture debt here, how is it different from the pure equity kind of a model? And at what stages do you think, startup can reach out for a venture debt structure?
So, for example, a lot of times, of course, venture debt comes in at a time when there is an adequate level of, I think, equity investment already at play. There is a certain use case for, an established business model. There is visibility into what revenues are going to be incurred by that particular entity. But it's basically ensuring that you are able to fill the gap between rounds of raising. And that's really like the value of debt for a lot of startups who aren't able to go from one round to another. And at that point in time, if you're able to partner with, an enabler, because I feel that, I think we are an equal growth partner for all our startups. We, in fact, sit down with them and advise them on where to deploy this capital that they're raising. And, advise them on, do you really need to raise debt here? Do you need to raise equity here? Where, what form of capital suits your particular business need at a point in time. We help them understand that. We also help them, okay, if this is a long line of, capital you're looking at from us, I would recommend draw down only X given your particular scenario right now. So you're not incurring any interest on that if you're looking at raising from banks as well, etc. Versus, when is it that you really do need to deploy that capital? What sort of, runway are you able to maintain? How frugally are you able to deploy that capital? What efficiencies can you drive into your system? So I think it's a mix of the two. In terms of, I think equity debt is the right way to go. Unfortunately, people are more equity heavy, and therefore there is adequate founder dilution, in the market. And oftentimes you'll hear, oh my God, that person has funded a startup. How often have you heard of founders who have made, disproportionate amounts or sums of money in proportion to what the companies may have made, right? And how are you able to safeguard your interests as well as a founder? And I think that's where a debt
True
could
that.
really come into play.
Absolutely. I think, that's an alternative to an equity that you talk about. So, generally, I think venture debt comes into the picture when you already have some investor or anybody seed funding, when you already have some investors, right? So, venture debt, you generally do not look at for a first time investment. So, you already need some equity stake should be there. I mean, that is my understanding of venture debt. It cannot be given as a first
Yes.
investment.
I mean, that ideally would be the use case, because I mean, there has to be some amount of equity invested into a company for debt to come into place on the balance
So
sheet.
apart from the promoter equity, there has to be some other third-party equity which should be in place, right? So for venture debt to come in.
Yeah,
Or,
more often than not, that's the case, yes.
okay, got it. Okay, so this takes me to another question, very interesting one again from the valuation perspective. When you're talking about, I'm sure, from a venture debt side, generally we may not require valuation, but when you're talking about from an equity perspective, what is the role of valuation here? And what are the things the promoter has to take care when he's getting into the valuation exercise?
I think we discussed this briefly earlier, but I think it's important to understand, like I said in the previous question, what the discounting factors are going to be used, basis which you're going to be agreeing on a certain valuation for the organization. That also, I feel, is a mix of two micro as well as macroeconomic indicators. So you had seen inflated rounds in the past couple of years, and with the funding winter now, you are seeing downward revision of that. So I think it's a function of course, mindset, which is not something that you can control, which are macroeconomic factors that are, out of the control of the particular entity that is doing the fundraising in this particular case. But there is a due importance, of course, given to the microeconomic factors of that particular entity at play, and what exactly is it that they're bringing to the table. So from that perspective, I think it's important to understand a lot of it also depends on, I guess, the level of negotiation that you as a founder are able to drive with people, at the table, and be very well aware of what is it that you are bringing, in terms of a solution to the table, to ensure that you are able to cash in on what your strengths are when you are having those negotiations. And more often than not, I feel that level of awareness is more generic than specific and tactical.
Agreed. No, that perfectly captured here, Ravneet. Because generally, I also deal generally on the same way with the promoters when they come to me that they're raising equity or they want to raise equity. So my first thought to them is, okay, besides the equity, you need to understand that what is the valuation of the company right now. So irrespective investor requires it or not, so it's important to get your valuation done so that you are in a position to negotiate with the investor. Because, unless and until you know the valuation of your brand or your company, you will not be able to negotiate also with these guys if this is right or not. Tomorrow he might come back and tell you, okay, I'm ready to put in this amount of money, and this would be the equity stake that I'm looking at. So unless and until you know the valuation of the company or the worth of the brand that you're talking about, you will not be able to negotiate also. So because sometimes they're a little finicky about कि valuation abhi kyun karani hai. We will get it done anyway when the investor comes in. So investor will do the valuation. So that is where we generally prefer that, whenever we start a discussion on an equity side with especially a founder or a startup, it's important to get that valuation exercise done so that he is aware about where to start a discussion and his expectation levels are taken care of. So that is something, I think personally is very, very critical from our side. Again, very interesting thing that you mentioned, and we've been hearing a lot about it. What is this funding winters? A lot of it has been discussed about that funding winters and the impact on India market. So what is funding winters about, and how do you think it'll impact the entrepreneurs in India or investments in India?
I think it's important to understand it's not really how do I put it? I think it's just the ease with which capital could have been available. But for I would say deserving winners or deserving startups, I don't think that there is an issue if you really have a very strong, solid case. But of course, it's I would say that it's not that liquid a scenario when it comes to funding right now. So of course, there's a lot of contingencies in play in terms of how much capital, why, what valuation, what is the use case, where is this money coming from, what is it really going to be deployed to. So I think the number of questions also sort of increase. There's a lot of dry powder sitting in the market right now. I was reading a report, 23 billion right now in India. I think that's enough of a buffer if you were to look at from that perspective. So it's all about having your articulation, spot on.
Okay, so if you have to compare about investment in India as compared to what it was last 2 years, so how do you think, the things are moving on right now? For example, the 6 months when you're talking about April till now, the kind of investments which have happened in the sectors right now, as compared to what it was last 2 years. So do you think there is a change in the investment? Has it increased, or how do you think, probably it will be going future? Just to understand the comparison.
I think she's no more on the meeting.
Yeah. Reena, can you just ask her to join back? Maybe she's just got disconnected.
Yes, ma'am. Just give me a second. I'll just check, please.
Sonal, in the meantime, can I add a question?
Yeah, sure. Please go ahead.
See, coming up with specifically to the real estate, now the PropTech is picking up very fast. So
Right.
there are a lot of collaborations which are needed now with the new ideas which have to take shape. So in that, how do you say that the founders do not have the domain expertise in all frames, but they do come from the real estate domain expertise, but to gather the teams from the different, whether it's IT or it's a digital marketing or, the other possible things that we can think of. So how do the investors look into it? And now that Ravneet has come, you can please put that question in a format you deem fit.
Sorry, I think I had a disconnection, but the host took a while to let
No
me back
problem.
in.
No problem. Yeah. So,
Sorry.
Ravneet, I was discussing with you on funding winters and how the scenario has changed in last 2 years from the funding side, and what do you see next 6-7 months from now, or a year from now? How do you think this is going to impact? But before that, there was a question from one of the audience who's joined in, where she's trying to understand more about that for any founder which has got into prop tech, where she has an experience into real estate as a sector, but she doesn't have domain experience into digital marketing or into the other operational side of the businesses that you talk about. So how do you select teams there? So what is a strategy plan there for getting on the teams there? Should it be in-house? Should it be outsourced? What are the various options which are available there? Please correct me if I put my question
I
right.
think that's a very good question, actually, because it's important to identify what can be cost centers for you, which can easily be outsourced and derived from at a much more specialized level of service for a cheaper fraction of the amount you're going to shell out for that particular service. But I would always say core functions which are really I would say critical to business business growth, which are critical to your USP, are ones that should always be retained in-house. Functions that can be easily tabulated, replicated, but are necessary. Those are, of course, if you can identify partners at play that can from a growth scale perspective provide you that flexibility. Also ones that can lower your fixed costs. So it's if it's a seasonal business, for example, you're also incurring that expense in proportion to the seasonality that you are experiencing for your particular business at that point in time. So I think it's definitely do get on third party entities to dole out functions that are not business critical, that can be specialized and provided by somebody whose job it is to provide that particular function. So you're probably going to get more bang for your buck from that perspective. But I think that's where founders need to be very, I would say, savvy in terms of identifying what those functions for your particular entity are. And I think that's where working with, when you start doing fundraising with larger institutional players, whether it be equity or debt, that's where organizations such as ours come into play. I'll give you an example. Someone had recently asked me, a founder, what does a chief policy officer do at a fund? And in fact, I've come from the policy side, that has been my background. And I have seen organizations not have dedicated policy functions till they've reached certain size and scale. So is that a function that you're able to outsource, right? And I think that's the advantage or the edge that you as a fund can bring to play for your portfolio, that currently may not have the wherewithal to invest in a function. I was just speaking with the founder yesterday, and I was aware of his startup and the product that he had, which is in the feminine hygiene space, I think about 3 years or 4 years ago. And at that point in time, he said, I didn't have the time, the effort it took to invest in that perspective, but I really feel that I could be heard. And I feel there's a lot that can happen in that space. And I was like, we can make it happen for you, right? If I'm looking at policy from that perspective, I can get them connected with the ecosystem, help them with their representations, get them access to a lot of government, policies that are currently out there, a lot of schemes that, people are not really aware of. Forget startups. I've interacted with Fortune 500 companies where one of them operating in India wasn't aware of a certain export incentive that they could have received on the manufacturing that they are doing for the HS code that they were manufacturing at that point in time, because of the category district that they were operating in, how localized their production was at that point in time. So these are things that I feel if you are also able to bring on the right cohesive partnership into play in terms of, so that's why I think it's not always about getting the money, it's about who you're getting it from.
Perfect. Yeah, absolutely. I totally agree. So it's like, there are a lot of people who are available with a check. So it's a hard call which the founder has to take, whether he has to take that money or not. Because, anybody who's ready with a check may not be the right guy for a system. Sometimes, you might have thought process which clashes. So instead of add value add, it's going to have a negative impact on your business.
In fact, deserving founders or companies that know that their offering is solid will not find it difficult to raise money. They will be spoiled for choice. And that's where I think true negotiation, skills also come into play. Can you make it a buyer's market or a seller's market? Which side of the table is heavier in this negotiation?
No, absolutely.
Sonal, I have a question. This is Priya from Chennai.
Hi, Priya.
Hi. This is further to the question that Kunal has asked. I've been listening to our speaker, and I understand that the startups which are basically there now are looking out for funds, and these investors who would be providing, maybe from the government side or maybe from private sector, whoever, they are looking at a certain quality of people who are going to provide them. The product is to be startups cannot afford. Now, if you have to get the best in the market for your product, then again, it is again a chicken and the egg story. Like, you need this, the startup needs the money to get the best talent in, whereas the interns are the ones who are right now at all startups, and everybody has got a very low work ethic because they're beginners, and the startups are facing this particular challenge with the investors. So will ma'am be able to help some of the startups in organizing themselves as to how they're going to get good talent into them to present? Like deep dive technology, they're asking. The investors are saying, get us a PowerPoint presentation on the deep dive side. So where is the deep dive without the expert man? And the expert guy is asking somewhere around 3 to 4 lakhs a month. And these guys cannot afford that kind of payments to the specialty guy. So where is the question to these people? Where is the solution for these people to make their startup be heard?
I think if I'm understanding your question, it's a function of the ability to attract good quality talent when you're not in a position to pay for that level of quality. I think it's
kind of. I'm saying the startups challenge starts from there. When you're representing a startup company with the kind of people that you have and the kind of product that you're dealing. For example, why I'm saying all this is because I am involved with one of these startups who's got content writers platform where they're creating an economy for the content writers to come in together and make a platform for them. And they have a setup which is not enough, and they need a very high level presentation to be done to the IIT of Chennai. It's called the Pravartak, who is providing funds for the startups. But their expectation of their presentation is much, much, much more than what these people are able to provide, even as a quality. These guys are quite good. I see them, but they're not able to, attract and impress upon the investors and get the kind of funding. Not much. I'm talking about 50, 60 lakhs, that kind of funding also.
I think if your question is around presentation skills to pitch, how startups can be more savvy in terms of making their pitches, is that your question?
It's not exactly the skill. It is the availability and the truth about what is available for the startup versus what the expectation from the investors are. The expectation from the investment side and the startup where they are, those two don't seem to match anywhere so easily. That's where I'm asking, how would you be able to help these startups get to a better position to position themselves with the investors?
I think it's important for a startup also to understand from an investor's perspective on what are the questions they would be asking and prepping themselves accordingly. Oftentimes the mindset, like you're saying, would be very different. So you have to put yourself in the other person's shoes and try and understand. Of course, the investor is going to ask very tough questions to safeguard their money that they're putting in, and they're going to be looking at the ability to earn back a good return on that. So, and mind you, the focus of that, that investor is not going to be on the quality of the presentation. A lot of times they're like, I don't care about the slides. Show me the product. Give me the demo. Let me speak to the user. So that would be a 5-minute elevator pitch, but a shrewd or an acute investor would know when to look beyond just that. So I do not see it to be as a hurdle, but of course it is a basic hygiene factor that you need to be aware of. What are the basics that they should be looking at, and are you able to articulate what your offering is? I was at at a founders dinner at an interaction a couple of weeks ago, and I was amazed to see some people with great ideas, but it took them about 5 to 6 sentences to summarize and really arrive at what their product is. And this was just a dinner table conversation, and I ended up finding myself paraphrasing a lot of times. So is this really what you do? And they're like, oh yeah, you said it better. So, but you see, that's just, maybe there's a need to socialize your idea and your conversation with people outside of your startup who can help you get a difference in terms of a perspective on how does a person outside of this particular product field or this particular startup ultimately understand. And sometimes for technologically savvy founders, they need to dumb it down for the other person to understand. which is why a lot of funds have CTOs in residence.
Yeah,
Because
a touch feel
you
product
want
is good
to
enough.
match that
It's an
mindset.
intellectual product, I'm asking. A
Sorry?
touch feel product, yeah, this is the product, this is what we're manufacturing. That's very good. But this is an intellectual product that they are trying to market, where the whole challenge starts. The intellectual product comes only when the intellectual part is really given the platform, and then that product has to be exhibited later on. Right now it is raw, everything is raw, so you will be able to help them in some ways. My question.
I'd be happy to get on a conversation on who this particular startup is.
Yes.
But I really think it's about articulating what is the problem you're
Yeah.
solving for, what is your competitive advantage
Yeah.
that you really have, what is the differentiation, your particular USP, and how are you solving for this differently as opposed to any other entity, and how are you doing it in a more cost-effective, cost-efficient manner? How are you doing it in a scalable manner? And I think if
I'll come on one-on-one later on with you.
Yeah, sure.
Absolutely. So I think that's what Priya Ravneet was trying to mention, that, in startup, what happens is the idea is important. So it's like, there are a lot of there are a lot of investors who bounce back and are more keen to understand on the idea, on the market for that product. So it's like, sometimes you require a mentor to probably, help you pitch in as well. Because as she said, there are so many founders who have brilliant ideas, but they don't know how to pitch well, or they don't know how to strategize well.
Yeah.
So that is where, you require somebody as a mentor to help you pitching also. But you can definitely get in, connect. I'll share with you Ravneet's number. You can connect with her. And anywhere you think, probably she can try helping the founders on those spaces, I think she'll be more than excited to work on it.
Thank you, Sonal.
So, Priya, like I had said in the beginning itself, that from passion to execution is a long journey, and it
Yeah.
has so many hiccups. And therefore, it's so important to have experts like Sonal and Ravneet to handhold through those hiccups so that life becomes easier. But having said that, before you get on a conversation with Ravneet and Sonal, the one-on-one that you're planning, it's important that the questions that she's raised are all very crystal clear and answered. For example, why, how, when, where, because she spoke about what you're planning to do, what is the problem that you're planning to solve, and also who your competitors are, how do you differentiate yourself. So have all these ready so that it's a very
Yes.
meaningful
I made notes.
interaction, out of which you actually get some, something which can really help you in moving ahead. So great, lovely listening to all of you. I'm surprised Tina is quiet, Dr. Kamal is quiet, Smita is unusually quiet today. I think a lot to absorb probably. And Manasvi, you are a startup yourself. You've done so much in the hostel and co-living space. So we would like to hear a little bit from you as well.
Ananta ji, I am outside right now and I'm driving.
Okay, I
And I
understand.
joined
All
at
right.
4:25. And yes, I too am trying to absorb everything.
No, definitely. I'll share across Ravneet's number also, in case somebody requires. So you can definitely get in touch with her. And lastly here, like I was mentioning before, that apart from Stride Ventures, Ravneet has another hat which she wears, and she's been doing it fantastically well, where she is also on the panel with the Good Glam group, where, these guys have competitions and they've been supporting women entrepreneurs. So Ravneet would love to understand that, what is it support that you're talking about? What is this all about? What is the kind of support here that you guys have been giving? And what is the criteria here for selecting?
Sure. So I think not a different hat, just one of the many things that we end up doing. Ultimately, like I was telling you, 22% plus of our portfolio is impact oriented. And I think we're very, impact is very close to our heart. Whether it be in terms of, women empowerment, whether it be in terms of climate impact, whether it be, in terms of financial inclusion. various aspects. But I think from me being a woman, a mother of two as well, and the challenges that I faced of, staying in the workforce. And when I heard of Good Glam doing this, where they were trying to, promote mompreneurs, they've come up with a show called the Mompreneurs Show for moms, mompreneurs, mom entrepreneurs. And she was mentioning to me about the challenges that a lot of these women have had in terms of, just their ability to continue in the workforce by sheer virtue of motherhood coming in the way, and how they've been able to balance that. And it's something that really tugged at my heartstrings. And of course, I feel the only way to do create any sort of impact is to pay it forward. And immediately we were on board as as a key partner. We decided we're going to promote the event in whatever way we can, and I got on board as a jury panel, as an advisory member. I also Stride has also provided a cash prize we will be providing to the winner. It's ongoing. It's been an ongoing campaign since I think the last month and a half. Applications had closed sometime in August or September early, if I'm not mistaken. Earlier this week, I had a round where we went through 10 pitches, and there are other judges. I'm not the only one. There are quite a few other judges. So they're doing their bit. So it's a community that they've sort of created. And I think maybe food for thought, if that's something that Ridco can look at.
Absolutely. I think, very great concept to look at, because women entrepreneurs, it's a different league altogether, where they have to manage business, they have to manage family, they have a lot many other responsibilities to take care of. If there is some support system which can come there. So I think, that's a commendable job which you guys have been doing right now. So great. I think, these were some of the things where I wanted to discuss with her from the panel side to give clarity to everyone on startups, on valuations, on pivoting, on funding winters, which everybody has been hearing a lot about. So impact it has on entrepreneurs and investments in India. So any questions from anyone, please, you can shoot out right now.
I'd just like to say I'm available on LinkedIn as well and fairly active. So you can definitely, connect with me on that platform as well. And I think it's a great initiative. All for women empowerment, and if we can come up with a construct or a mechanism on how to convert these webinars and take the next step on something similar in terms of curating a mompreneurs concept like event, how can we come up with a formal mechanism to promote more women entrepreneurs? I would be happy to be involved, not just in my personal capacity, but I speak for my organization as well, because I think it's something that's very dear to our heart, and it's something we really stand by, and we feel that there is a lot of there's a lot of potential out there that is latent and untapped.
No, absolutely. That would be fantastic. We've also been pretty actively working on skilling and on supporting women entrepreneurs. So I think, we'll definitely connect at a convenient time slot to explore any synergy, which we can explore out with Stride. So that would be a pleasure to connect and work.
Lovely.
Sure. Yes. Any questions here? Anyone? Which Priya?
I think someone has their hand raised. There is only one hand raised.
I'll come in.
Yes, sure.
Yeah. Thanks, Ravneet. That was really eye-opening on a lot of fronts, and like the way that soft approach you have towards helping the startups. Not all of them have this. Okay, so I also checked on your LinkedIn profile. You're working on decarbonization, which I think the real estate sector should be focusing a lot on this one, and industrial decarbonization. So you have any advice to give to this group, and as a MAHI, that what we can do in this direction from your vision towards a net zero in real estate?
I think the idea is, I was on a panel recently, which, was talking on sustainability as a business opportunity. So do not consider it as a hindrance, as a compliance, as a cost, as a detriment. see how you can pivot it, since we were talking about pivot, see how you can pivot it into a business opportunity in your business and create it as a differentiating factor. And happy to speak to you one-on-one if you have any specific questions or help that I can provide, not just from a capital perspective, but also from, connects within this particular industry. Happy to do that.
Thank you. Wonderful.
Thank you. Thank you so much, Sonal, for having me. I think it was a great session. And thank you, Dr. Ananta and the rest of the MAHI team.
So much.
Very nice to
Any
see the
further
great work you guys
questions,
doing.
anyone? So Ravneet will be happy to take that. And Ravneet, thank you so much for taking our time. It was a pleasure having you with us, and we definitely look forward to more associations with you and the Stride Ventures to discuss on any synergy.
Thanks, Sonal. Bye-bye. Have a great evening and a lovely weekend.
Thank you so much. We enjoyed every bit of it. Thank you, Ravneet.
Good
And we
luck
look
and
forward
onwards
to
and
having
upwards.
many more such sessions. And please block your calendar for the 8th of December. I would like to personally invite you for our MAHI convention at Connaught Place. I think we are probably having it at the Lalit.
Yes, ma'am. It's
So
Connaught
see you
Place,
there.
Lalit.
Yeah. See you there.
Thank you.
Absolutely.
Many, many thanks, Ravneet ma'am, Sonal ma'am, and all our MAHI members, and especially to our new member like Miss Yashoda ji and Miss Manasvi ji. Thank you so much, Ravneet ma'am and Sonal ji, for the wonderful session.
Thank you.
Thank you so much, Priya.
Sonal.
Thank you so much.
Thank
Thank
you.
you.
So much.
Bye
Bye
bye.
bye.
Thank you.
Bye.